Hello, everyone, and welcome to this episode of Ignition Time. As inflation is going through the roof, different states are actually flush with cash. Yes, you heard that right. There are cash rich states all over the country that are now creating what they call a competitive environment and trying to put money in your pocket, specifically in the pockets of their residents. Welcome to this episode of Ignition Time, everyone. My name is Dr. Nitin Chhoda with Ignition Time. This right here is some information about me. Check out my introductory video. Also, please click like and subscribe if you haven't done so already. Here's a headline of an article on your screen from CNBC. Cash-rich states create competitive environment with a flurry of tax cuts. So what's been happening is there have been a wave of state tax cuts as a direct result of budget surpluses. Yes, you heard that right. Budget surpluses and more tax breaks may be on the way. In fact, 29 states and DC, the District of Columbia, actually enacted significant reductions in 2021. Now, this could cause problems in the future for states who are trying to earn income, but at the moment, it's very clear that their residents are actually benefiting. According to Catherine Logheed, who's a senior policy analyst at the Tax Foundation, states have a lot of revenue on hand and they are looking to return it to taxpayers. In fact, in 2021, 29 states and DC enacted significant tax cuts, according to this article on your screen from the Tax Policy Center. You'll see the headline of the article, How Post-Pandemic Tax Cuts Can Affect Racial Equity. We'll provide you with a link to this article in the description section below. Now, what's happening is these states are providing tax cuts through reduced individual rates or expanded earned income tax credits, which is basically a write-off for low to moderate income families. Let's take a look at this graph on your screen, and you can see the states in the darker colors that have an income tax cut. Let's start all the way on the West Coast and with the state of Washington. Washington had an earned income tax cut. The state of Oregon had an earned income tax cut. Idaho had an income tax rate cut. Montana had an income tax rate cut. Arizona had an income tax rate cut. Now, New Mexico as well as Colorado had an earned income tax cut. Now, moving on to the middle of the country, Oklahoma, income tax rate cut. Louisiana, income tax rate cut. Missouri, income tax rate cut. Now, moving north, Iowa, income tax rate cut. Wisconsin, income tax rate cut. Indiana, earned income tax cut. And the state of Ohio, income tax rate cut. Also North Carolina, income tax rate cut. And then many states along the East Coast, Maryland, Delaware, all of these states, including the state of New Jersey and Connecticut, all have earned income tax cuts. And when we move further up north, Maine had an earned income tax cut. So this year, at least a dozen states have made cuts or are looking at reductions, including both temporary and permanent measures. Now, there have been some pushes for corporate or property tax relief. Income taxes are basically the heart of what's going on. According to Brian Sickridge, who's the director of state fiscal studies at the National Association of State Budget Officers, overall, most of the tax cut proposals have been relatively modest and a number have been targeted. The targeted proposals we're seeing are directed towards helping with the impacts of the pandemic and inflation. So what is happening is some of these tax cuts have included changes to grocery taxes, levies on retirement benefits, earned income tax credits, small business relief, also pausing gas taxes, and much more. So what is happening, folks, is the Treasury Secretary Janet Yellen has said that very uncomfortably high inflation will likely last for another year. So what is happening, folks, is that while last year's tax cuts were primarily done by Republican-led states, rising inflation in 2022 has actually prompted both Democrats and Republicans to try and push for relief. For example, in New York, the Democrat Governor Kathy Hochul called to push forward a tax cut for middle-class residents, including a property tax rebate program during her January State of the State address. And also last week, New Jersey Governor Phil Murphy, who's also a Democrat, actually proposed a property tax relief plan in the form of rebates for 1.8 million homeowners and residents. So what is happening, folks, is there is a budget surplus for many states, which is why we're even having this discussion. So basically, what's been happening is a lot of states have better than anticipated revenues after they had sharply reduced their forecasts during the pandemic. So the bottom line is a lot of states made money. And why is that? Well, because high income Americans kept working through most of the pandemic. They boosted state income taxes, and the federal stimulus money bolstered spending in local economies. And when you spend in your local economy, when you buy groceries, when you go to a restaurant, a portion of what you spend flows back to the state. So what is happening here, folks, is that states actually have more money than they had originally anticipated. And a lot of the individual relief that the states essentially gave out, that the federal government gave out, did go through local economies, and a portion of it made its way back to the state. In fact, 32 states are projecting that in 2022, they'll make more money than what they had anticipated. So what a lot of states are doing right now is that they're trying to attract residents, while certain states are actually losing residents. Yes, the high tax states are actually losing residents. A lot of residents are leaving high tax states and are going to low tax states. In fact, from April 2020 to July 2021, high tax states like California, Hawaii, Illinois, New York, and DC were the top 5 states to actually lose residents. During the same time period, Idaho's population grew by 3.4%, and Arizona, Delaware, Florida, Montana, Nevada, North Carolina, South Carolina, Texas, and Utah all saw a growth of 1% or more in terms of their residents. So more and more individuals are actually flocking to low tax states. Now, the big question is, what are going to be the long-term consequences of states slashing taxes? Because at the end of the day, states need revenue, and they need to make sure that, okay, they have a surplus this year, but are they going to have a surplus next year and the year after that? And are they going to have balanced budgets going forward? And that requires future revenue growth. Now, I want to be clear that this is a midterm year. So it's very popular to slash taxes in an election year, but states now need to look forward and look to the future as well. And many states actually have millions of dollars from the American Rescue Plan that is still unspent. So let me know what you think about this. A lot of states want to put money in your pocket to try and get you to move there. Please click like, please click subscribe, please enable notifications. Thank you so much for watching. I appreciate you. I want you to know I work very hard on this channel every single day to bring you the latest news pertaining to the country, the economy, as well as our money. And I encourage you to please share our videos with your friends and family. Thank you so much once again. I'm looking forward to seeing you in the next episode of Ignition Time. Take care. Bye.